Well, hello, everybody. It's the Minority Report, as we call it. And I do these once a month because they take a long time to prepare. This didn't happen today. This has been in the works for quite some time. I was hoping to get it out last week. I did not. I was delayed. And you'll see there's a lot to it, a lot of new stuff as well, and a big shakeup in the miners. We're going to break it all down. And I've got a new ratio and a new composite score. And we are now integrating HPC for the first time, and we'll get to the bottom of it. We'll talk a little bit about private jets and aggressive takeovers and so much more. A lot to talk about here. Let's see what's changed. And let's jump in. Oh, by the way, there's also some massive dilution, rig analysis. And again, 42 new financial ratios, the most comprehensive miner analysis on the planet, and over 8,000 numbers analyzed. Let's go. And shout out as well to Patreon, who make all of this possible. And Bozena W from Australia says, being a Patreon member has been crucial to my 3-year journey of owning a whole Bitcoin. Woohoo! Keep your security locked down. And also, the extra content and community have kept me focused and motivated through the ups and downs. James is such a constant in our home that even my husband and kids recognize his voice. Woohoo! Well, Bozena, I'm very proud of you. Powerful woman in investing and finance and crypto. And yes, there are ups and downs. And shout out to Andy too, also from Australia. The Australians love their investing and crypto. Disclaimer, this is not financial advice. I lay it all out so you can create your own cocktail of numbers and make your own decisions. I don't tell you what to do. I do share openly and transparently what I do, however. Let's take a talk about 1 year comparison. Now, we did get into things like CleanSpark and the bear market and made a killing, but I decided just to go back. I was going to go back year to date, and I decided to go back a full year and see exactly where we are, because something very telling comes out when we analyze Bitcoin miners over the last year, and that is, Bitcoin wins. Bitcoin beat all the miners. And you can see here in this chart, Bitcoin is up. Make sure I can read the percentages right. Should have them written down. But about 108% over the last year. WULF is number 2, about 91%. CleanSpark, number 3, about 89%. Bitfarms, number 4, 70%. Iris Energy, number 5, 62%. And Marathon, number 6, about 28%. And some miners are actually down over the last year. HUT, HIVE, Riot, etc. So remember, I always stress Bitcoin mining is a cutthroat business. Never have more than 5% of your assets in miners. And sometimes in the middle of the bull is not the best time to buy Bitcoin miners. But we'll see if there's any hope. Even though hope is not a strategy, as you know I'm going to say. So first of all, let's check out the relative value from Econometrics of the miners. Basically, in his model, he has a different model than mine, but I thought it was super interesting to share. Fair value price for all the different miners. The easy takeaway from this slide is all of them, all of the Bitcoin miners are under fair value, with the exception of perhaps WULF, which is almost at fair value, and Iris Energy at fair value. The rest are deeply under fair value. So, thank you, Nick from Econometrics. I am a very proud subscriber to his stuff. Let's also talk about the other big change. I always analyze dilution. We actually, so much so, I had a team build me a dilution model that can analyze stock dilution from any window of time at any time across many, many different assets. But what they're doing now is they've pivoted away from stock dilution to debt issuance. And we saw that happen with players like, Bitdeer have issued debt, Bitfarms have issued debt, Cypher issued debt, Core issued debt, Hive, Marathon, Riot, TeraWulf. They've all flipped over. This is data from Blocksbridge Consulting based on earnings reports. 9 out of the 13 US listed companies raised a combined $1.25 billion through different offers and debts and everything else. So debt issuance and debt is happening in a big way. We know Marathon issued debt to buy Bitcoin, $250 million worth. So why not? some people are issuing debt to buy rigs and get more modern. We'll talk more about rigs and efficiency with a cool new metric as well in a minute. And another good news, before we get into the, what I call the, what do I even call it? Math model time or whatever. Anyway, you'll see it in a second. But Bernstein upgrade multiple miners to Outperform. And these are names like Riot Platforms, CleanSpark, Iris Energy, Core Scientific, and these were Outperform names, and it said rating Marathon a market perform, not Outperform. Interesting, they called Marathon out specifically. Also, they said CleanSpark receives very high marks for its energy efficiency and realized hash rate. Interesting. We're going to break all that down in great detail in a minute. But before we do, we got to talk about the elephant in the room, and that is HPC, high performance compute, all of this AI revolution happening. And these are the names entering the fray of HPC. Several mining companies have made strides diversifying their operations. TeraWulf have announced plans to expand energy infrastructure to also make it available to HPC AI applications. Core Scientific, their valuation exploded because of a deal that they signed. HODL are going to do more of it as well. HIVE and Iris as well have made notable progress in exploring HPC and AI opportunities. In fact, Iris has also bought some machines from NVIDIA as well. Now, I grew up learning traditional ways. And I remember, I think it was Peter Drucker said back in the 70s or 80s, a firm should also always stick to its knitting. The best firms are ones that are hyper-focused on one thing, not spread across many different areas. But of course, that can change. And maybe the 80s, 70s were different. I do come from that area, so maybe I'm just a dinosaur. But let's get into the revolution that is happening for sure. And AI demand is driving insane demand for power. It's all about power. JP Morgan reiterated that this is a massive opportunity. HPC, high performance compute, and AI are powerful technologies, but there is an incredible need for energy to drive these machines. And that's what some of the Bitcoin miners are doing. They're pivoting over to that. So we'll see. And a lot of people are very excited. But what I do is I get to the heart of the issue and I look at data and numbers. Okay? So people think, oh, HPC, AI compute, it's going to take over the world. Yes, it will. But it's also going to be very competitive. Let's look at where miners make bank today. So this is from Luxor, their brilliant little paper. And all you need to know is the sum of all revenue sources: mining, $811 million in revenue; hosting, $100 million; cloud mining, $18 million; HPC, only $13 million. And you add all those up, and there's other stuff, another 12 million of rando stuff. HPC revenue percentage for Bitcoin miners only brings in 1.4% of revenue. 1.4%. So it's not huge. It will grow. Will it be 10%? We're not sure. Now, this has also triggered a huge spike in valuation for some of these miners. This is what I call the HPC Added Premium. So if you look back over the last, let me check how many months this is. Excuse my eyes. Going back to actually January 2024. You can see the amount of spike. So if you look at the pink line, these are miners with no AI HPC strategy. And gold is ones with AI HPC. Look at what their stonks have done. Absolute bonkers performance because everybody's excited. But there's a problem. And the problem is what I showed you here before. Don't get too excited. But there's more bad news too. And I don't want to be throwing a bucket of cold water on this. I think it's very important for some miners to maybe dabble in this area. When they can't cut it in Bitcoin mining, maybe they should refocus in other areas. But this is the real problem. This is the competition, who are massive. These are firms that spend literally many multiples of the entire market cap of all the public Bitcoin miners on the planet into hyperscalers, right? The top 3 firms, AWS, Google, Microsoft, nearly $400 billion has been committed by them. And remember, Bitcoin miners are going up against these massive, ruthless, highly effective, highly efficient organizations. And if they think they're going to step into their backyard and beat them, yeah, that's just not how nature works. Anyway, there will be Bitcoin miner playlist here afterwards and at the end of the video. If you like my miner videos, I only do one a month because they take so long to do. I wish I had more time. Let's get into the math engine time. Okay, this is where I break down lots of financial numbers, ratios, data, and you can pick and choose whatever you want. You know, if you like certain ratios, take them, create your own little cocktail of how you assess miners. I'm not here to tell you to do that. I have my method, which has been very effective now for 3 years, and we're changing it, we're refining it every single day. Shout out to the team as well that keeps the math engine up and running. Let's talk about a couple of things first. And I'm not showing everything. I'm showing just pieces of what's in this actual model. First of all, the gainers to the 52-week high is interesting. You can see here, Riot has sold off the most. It's 131%. That's how much it has to gain to get back to all-time high for the last year. BitDeer, 122%. Marathon, 108%. CleanSpark, 107%. Cypher, 106%. And Iris, 98%. Some are really high, like Core Scientific, only 22% away from all-time highs. But remember as well, Core Scientific went through a bankruptcy last year and wiped a lot of people out. So remember, some things will show up here that'll look a little bit weird, like reverse dilution because shareholders are wiped out and things like that. So bear that in mind. Let's talk about share dilution. This is massive from our model. It shows you the biggest diluter this year is Iris Energy, 154% year to date. We're only in the middle of August, by the way. And there's 154% dilution. Number 2 in the box is WULF, 38% dilution. Number 3 in the box is CleanSpark, 37% dilution. Riot, 32%. BitTeer, 25%. Mara, 24%. HIVE, 19%. And Bitfarms, 19%. Cypher, 13%. HUT, only 2%. And the Core Scientific number there is minus 53%. Remember, this thing calculates based on reality. The number of shares outstanding has fallen because of the bankruptcy and the reorganization of Core Scientific. That's why it looks a little bit funky, a little bit off. So it's just numbers, and numbers never lie, ladies and gentlemen. Miner HODL bags. This is bonkers. Marathon now hold over 25,000 Bitcoin, which is huge. We'll break that down into further ratios in a minute. Riot, 9,700. HUT, 9,100. CleanSpark, 7,000. And the rest have much smaller bags. But what really matters is how much they have, how much they produce per month, and then how much they have as essentially market cap. So here, this is production July numbers. Marathon is the king of the hill. 692 Bitcoin produced in July. CleanSpark, 494, number 2. CleanSpark used to be at the bottom of the list when I started analyzing it 2 or 3 years ago. Core Scientific, number 3, 411. Riot, number 4, 370. Bitfarms, 253. Iris, 222. I like that number, 222. It's kind of funky. But let's see. I asked myself, it's like, oh, hang on. Where were they right before the halving? Wouldn't that be an interesting analysis? Yes, it would. Let's go. By the way, it's my second video today, so if I'm a little bit caffeined out, excuse me. But this is the shake-up post-halving, and it's pretty unreal. Core Scientific fell from grace from doing 906 Bitcoin a month to now less than half, only 411. HUT also are doing less than half, and Bitfarms is doing nearly the same. So this is a big shake-up. Everything is a little bit topsy-turvy. Much of this is due to the fact that some of these miners held old rigs that simply either they're not efficient or effective, or they had to turn them off, etc. And that's why there's such a big change here as well. Let's look at the current hash rate for these miners as well. Marathon, 31,500. Riot, 23,300. Core Scientific, 21,100. CleanSpark, 21K flat. Bitfarms, 11. Iris, 10,500. Now, what's important here as well, remember, Even though you may have the most amount of hash, it doesn't mean you produce the most amount of Bitcoin. It all depends on the rigs you actually have. And we have a metric for that too. This is also an important metric, is future hash and growth rate. Iris is top of the charts. Now, some people say Iris is going to go to 40 exahash. Some people say it's going to go to 30. I chose 38. You can argue with me in the comments below if you want. You can put in whatever number you want. I don't care. But they have the highest level of growth. And it's going to be, I don't know, some people say by year end. Some people say, hello, Mr. Maniac, thank you for coming. Some people say a year from now. I'm not sure. It's all very vague. But I spend a lot of time looking at historic execution plans. To go from 10 to 40 in a short window of time is hard. Really hard. It's possible, but hard. Maybe you need to issue a truckload of shares and debt and everything else to bring in the money to make that happen. And it's not just having the rigs or buying the rigs. It's setting them up and turning them on. That also takes time as well. So we'll watch this very carefully and we'll be on top of it. Let's look at some more numbers. This is what I think probably one of the most important ratios. This is the dollar per month per rig. So when you look at some of these miners, some have literally over 100,000 ASICs rigs running. And this, I think, is a killer stat. The winner of this ratio is Bitfarms. They pull in $209.60 per rig. That means they are lean and mean, and they have very, very modern rigs. HIVE, number 2, 197.5. CleanSpark, number 3, $181 per rig. Marathon, $172 per rig. Cypher, $169 per rig. Riot, $162 per rig. Iris Energy, $158 per rig. Again, it's a lean and mean space, cutthroat space. You've got to be absolutely effective and efficient in everything you do, and I have to stress that highly. And that's what all these models, all these ratios look for, is identifying who is strong, who is weak, and then finding the perfect balance across all of these, because no two miners are alike, and that's the most bizarre thing. They are all completely different across 42 different ratios. Now, cash to debt, another thing is very important. Iris Energy win this one. They got a massive amount of cash versus very little debt. CleanSpark is number 2. They got 46 times the amount of cash on hand that they have in terms of debt. Riot, number 3, 28. Bitfarms, 4, etc. I only get concerned when it starts getting really low, like under 2, like BitDeer, HIVE, WULF, Marathon. Marathon, very scary. They have very little cash, but they're issuing debt, they're buying Bitcoin, and they have 25,000 Bitcoin. Same thing with HUT. They have a lot of HUT, so I'm not that concerned about those guys. Core Scientific, though, still remains in a world of hurt. They have very little cash. That would be alarm bells ringing for me. That's 0.16 amount of cash to liabilities. Anything goes wrong, they're toast. Think of your own personal house. Imagine you've got $1 million in debt, and you have 160 grand to service it and pay it off. It's not a lot of money. Anyway, liabilities over market cap, another key ratio I look at, and you can see the winner here is at the bottom, CleanSpark, 0.02, i.e. very little liabilities compared to market cap, and the loser is Core Scientific. 71% of their market cap is liabilities, debt, not good. BitDeer, number 2, HUT, number 3. We don't like to see that, especially now that many of these companies are issuing even more debt in a high interest rate environment. It's kind of scary, for me at least. But I'm a conservative investor, so take that as you like. Now, Bitcoin held as percentage of market cap. This is big. So we look at the actual HODL of the Bitcoin multiplied by the Bitcoin price as of now, real time. Calculate a big Bitcoin value held. And you can see Marathon have $1.46 billion worth of Bitcoin. That is 30.49% of their market cap. But HUT has even more as a percentage of the market cap. It's 36.79%. Basically, nearly 40% of HUT is their HODL bag. So if Bitcoin goes to the moon, they could do quite well. So watch that space carefully. HIVE, 30%. Riot, 23%. CleanSpark, 14%. Cypher, 11%. Bitfarms, 4% on the rest. Literally, they sell their Bitcoin as soon as they mine it to cover expenses and invest in new rigs, etc. Now, this is another key ratio for me. This is Production ROI Model. And this is how much return on investment they get per month from mining Bitcoin. HIVE win the day, 1.39%. Something has happened over at HIVE, but they got a lot more effective and efficient lately. BitDeer, number 2, 1.2%. Bitfarms, number 3, 1.06%. And CleanSpark, number 4, 0.98%. And that goes down the list. This is my proprietary little ratio, and it's a killer ratio. It tells you exactly who is lean and mean out there. Now, let's look at Bitcoin miner supply. A little bit of on-chain data. Bitcoin miner supply is at an all-time low, ladies and gentlemen. The miners have capitulated. They've sold pretty much all they can. And now you have companies like Marathon that mint Bitcoin, and they issue debt, and they buy Bitcoin following the Saylor playbook. Really interesting to watch how this thing pans out too. Let's look at one other ratio too. Bitcoin price versus the hash rate. I shared this earlier in the week. I thought it was a fascinating study looking at the correlation between hash and price, which follows which. Historically, price did follow the hash rate, but now it's completely out of sync. Hash rate has exploded up 500%, and Bitcoin is pretty much where it was back in 2021. So something's got to give here. I don't know what's going on, or maybe this correlation will be broken forever. But we shall see. We shall see. All I know is it's a very competitive market out there. If you want a recap of all these videos, there's a team behind me as well that does all of this. So it's about $40 a year for every slide, write-up, podcast, you name it. If you want to jog and listen again, because it's impossible to absorb all of this, and there's so much content being produced every day. Let's get to the conclusion, everybody. See if there's a big shakeup. First of all, these are the unweighted amounts, and you're just seeing a glimpse of some of the key ratios I look at. But you can see here, CleanSpark unweighted is still top, 81%. That's the average of all the final scores. Remember, you want something that is pretty good all around. You can see that market cap over future hash, CleanSpark falls down. That's weak for them because they were pretty fairly valued, but the price has come down a lot now. CleanSpark is now under $12. I shorted it at $20 in full disclosure as well, which was a perfect short. And we'll see if those calls expire worthless. Anyway, and the dynamics in the space are changing. Number 2, unweighted is Bitfarms. Number 3, unweighted is HIVE. Number 4, Riot. 5, Marathon. 6, Cypher. And then HUT. Bottom of the list is Core Scientific. And they don't do well because I don't like their debt coverage, their debt ratios, etc. And they had a very colorful history. And this model actually picked up the financial distress that they were in before they even went bankrupt. So it works. And there could be more financial stress coming for some of these miners too. This is the miner with my weights. So I weight certain things heavier than others. I'm very focused on dollars per rig, my production ROI, stuff like that, future growth rate of hash, etc. And the winner is CleanSpark still, but I'll talk about that in a minute. Bitfarms number 2 and HIVE number 3. But there's some news we have to tackle. Okay, the winner is still CleanSpark. Remember, this is a model I've used for years now, and it's been very effective of finding the winning assets. But some things are very volatile, and markets are not rational. Now, there's a lot of kerfuffle, let's call it, around private jet. So I worked adjacent to a company for a little while. I used to work at a very large, big Swiss company, and they had a little small subsidiary. That little small subsidiary had 8 private jets in the 90s. 8, okay? And they had them for certain reasons. But before we get into those reasons, CleanSpark have spent $10 million on a jet because they now have locations all over the place that are quite far apart. Some of them aren't that accessible for major airports. And if you know anything about money, you'll know that time is money. But this jet cost $10 million. They have a market cap of $3 billion. That is a 0.003 of amount of expensive market cap. So time savings to me is very important. If they have executives that have to go to multiple places that are hard to reach, multiple destinations in a single day, it's impossible with commercial flights. This is probably why they've done it. Private jets offer a more conducive environment for work travel. Passengers can hold meetings and calls, etc., with Starlink on the plane. Private jets can access smaller airports and remote locations that big commercial airlines can't. And by the way, a lot of CleanSpark locations are remote, everybody. They go to where the electricity is stranded. They are, by definition, remote. And flexibility, comfort, convenience, etc. Yeah, it's 10 million. And you can see here this little meme, which I thought was hilarious. It's like, oh, AI, no thank you. Private jet, yes, please. I know there are companies that have boondoggles and parties and they take it to Mexico and get drunk with a bunch of whatever on the plane. Knowing the people at CleanSpark is probably not their style. But I'm sure they did an ROI model around justifying why. Because they simply couldn't get to some of their new locations for the reasons I just mentioned. So I want to get that out of the way because people say, oh, they bought a private jet, therefore it's crap. Do the math, everybody. Come on. Second place, Bitfarms. There's an interesting story behind this one, too. Guess who owns nearly 20% of Bitfarms? Riot. Riot now own 18.9% of Bitfarms, and they keep on snagging shares. And they've been buying around $2.30 a share to $2.50 a share now for months. They tried to buy them. Bitfarms said no. So now Riot's doing it the slow, gradual way of just stacking shares as they dip, which... we'll see how this pans out. And there will be a lot more consolidation, etc. in the space. And then Hive mining. They had a really impressive turnaround in many different ratios. Market cap over exahash, production over hash, production ROI, price to book ratios, etc. Really doing very well. So that's the minority report. Hope you liked it, everybody. A lot of work goes into this. It's probably the most effort-intensive video, so hit the like if you like it. I appreciate it, and I can only do them once a month because they literally take days and days to prepare. Hope you liked it. Thank you all for coming. Thank you, American Beijinger, Sean Donnelly, TND Tesla, K8, all for coming. Hope you liked the video. And by the way, as I mentioned at the beginning, the time to exit miners are the time when Bitcoin pumps the most. Okay, and we'll be watching that very carefully. And we do have an exit plan as well. So coming soon. See you soon. Bye-bye.